I think it's good for Bitcoin. I think, in fact, it may be better for Bitcoin because I think that we are politically much more powerful, supported by the entire crypto industry, right? They obviously have a lot of political power, a lot of users, and they serve as another line of defense for Bitcoin. So I think that that's not the case. I'm quite the optimist. I actually think that Bitcoin is going to succeed. It is succeeding. It's succeeding as fast as it could reasonably succeed.
Since the successful introduction of Bitcoin ETFs earlier this year, eyes have been on Ethereum, the second largest crypto by market capitalization. In what is being called a surprising move, the U.S. Securities and Exchange Commission has approved the sale of spot Ether Exchange-Traded Funds, ETFs. The approval comes after the SEC combined proposals from the Nasdaq, NYSE, and CBOE exchanges, which asked for changes to existing rules so that Ethereum Exchange-Traded Products, ETPs, and ETFs are allowed. Ether, the native cryptocurrency of the Ethereum blockchain, is the world's second-largest digital currency by market cap. MicroStrategy founder Michael Saylor has changed his tone on spot Ether Exchange-Traded Funds, ETFs, arguing that the recent nod from the United States regulator is only good news for Bitcoin as well. Saylor said 2 weeks before, Bitcoin looked like the only asset securitized and offered as a spot ETF by the U.S. Securities and Exchange Commission, SEC. Millions of crypto voters have emerged since the 2020 presidential election, and they are poised to play a pivotal role in 2024. According to Michael Saylor, there are still many details to figure out, but market signals suggest Republicans will be strongly pro-crypto and pro-Bitcoin, while Democrats will reluctantly soften their stance. It's wild and upends everyone's model, forcing a rethink when things get political. Former United States President Donald Trump is reaffirming his support for the cryptocurrency industry, emphasizing the need for American dominance in this growing sector. In a recent post on Truth Social, a platform owned by Trump Media and Technology Group, TMTG, Trump stated, "Our country must be the leader in the field. There is no second place." He expressed openness and positivity towards cryptocurrency companies, highlighting his eagerness to embrace innovations in this rapidly evolving industry. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
I think there's a lot of details yet to be figured out, like what will happen next. But all of the signals in the market suggest that the Republicans will be violently pro-crypto, pro-Bitcoin, and the existing administration, the Democrats, will move to accommodate.
Reluctantly pro-Bitcoin.
They will move to accommodate and stop taking such an obstinate position. And it is wild. It upends everybody's model.
Yeah.
It's like when things get political, and this gets very political, then you just have to rethink all of your premises. And so here's what I think. I think 2 weeks before, the world looked like Bitcoin was going to be the only asset securitized and offered as a spot ETF by the Wall Street establishment, and it was going to spread as the one legitimate crypto asset. I think right now, the best expectation is the crypto asset class will be legitimized, supported by both parties. There's an industry. Crypto is an asset class. There's an entire range of use cases, 24/7 digital trading, digital art, NFTs, tokens, decentralized this, functionality, DeFi. There's a lot of things that will be considered in a more open light, and Bitcoin will be the leader of the crypto asset class. And if you look at it and say, well, is this good for Bitcoin or not? Yeah, I think it's good for Bitcoin. I think, in fact, it may be better for Bitcoin because I think that we are politically much more powerful, supported by the entire crypto industry, right? They obviously have a lot of political power, a lot of users, and they serve as another line of defense for Bitcoin. So I think instead of someone saying, well, there's one crypto asset, maybe I'll allocate 1% of my money to it, I think mainstream investors might say, oh, there's a crypto asset class now, and maybe we'll allocate 5% or 10% of the crypto asset class, but Bitcoin will be 60% or 70% of that. So I actually think it could accelerate institutional adoption.
We're back to indexing.
It's good for marketing. Yeah, there'll be all these other things that'll happen, and you just kind of have to rethink, all of your models and move forward in a new world.
The U.S. economy is currently facing a multifaceted crisis characterized by several interrelated challenges that are causing significant concern among economists, policymakers, and the general public. Inflation may have slowed last year, but it continued to deal heavy blows, some devastating, on Americans' livelihoods. Nearly 2/3 of U.S. adults were worse off because of it, and roughly 1 in 6 couldn't pay all their monthly bills, new Federal Reserve data shows. U.S. inflation rate is at 3.36%, compared to 3.48% last month and 4.93% last year. Bitcoin's demand is rising shortly after the release of inflation reports of 2024. Analysts say rising inflation could boost demand for Bitcoin. According to Michael Saylor, the foundation of Bitcoin's success lies in what he calls the 3 E's: ethics, economics, and engineering. He added that economically, Bitcoin is designed to be sound. Unlike an inflationary digital commodity, Bitcoin has a fixed supply, which protects its value over time. Saylor points out that this economic structure is crucial for long-term stability and adoption. Now, let's redirect our attention to a video.
I think it's the 3 E's. It's ethics, it's economics, and it's engineering. It's sound ethics, sound economics, sound engineering. And in ethics, it's this idea of a fair ledger and a fair asset. Satoshi created a way, Satoshi gave it away, Satoshi went away. Right? If you want the roadmap for an ethical launch of a decentralized digital commodity, an open protocol for anything, it's you create it, you give it away, you disappear. And Prometheus is not standing around taking 10% of the revenue from fire, and suing you for patent infringement a million years after Prometheus gave us fire. Just create it, give it away, go away. And so that idea is a very profound idea, because you think about how many corporations and governments in the world where you have the bringer of truth or the bringer of the solution, and they want to stick around and benefit from it, right? And so I think Bitcoin sets that example. And the second thing is it's economically sound, right? You can create in theory, a digital commodity that's inflationary. It's like, I can create and give away a protocol that inflates 5% a year, and I can go away and disclaim beneficial ownership, but it's still messed up. Like, it's still defective. Like 5% a year means it just keeps inflating. It doesn't surprise me that you don't see 100 or 1,000 publicly traded companies adopting Bitcoin as a primary treasury reserve asset in those 4 years, because I think the modern era, the institutional era of Bitcoin adoption starts January 2024. Right. And I think what changed in January 2024 was the SEC approved 10 to 11 spot Bitcoin ETFs. And that started an avalanche. And I think today there's like 24. There's 22 last week, and there were 2 added in London or getting added. So we went from a perception that this was not an endorsed or legitimate asset class at the regulatory level. And someone could have said, I think the SEC is going to ban it, or they're going to deem it a security or something. And the world changed by the middle of January. And now it was clear that it wasn't going to be banned. And then at the same time in January, the accounting profession offered fair value accounting. They changed the accounting guidelines, and they made it optional starting in January and mandatory next January. So in a regime where it is uncertain whether the administration will deem Bitcoin a commodity or security, and they haven't definitively spoken, and in a world where the accounting profession requires that you adopt indefinite and intangible accounting, indefinite and intangible accounting is the most toxic, prejudicial, discriminatory accounting treatment you can have. If I didn't want you to buy something or invest in something, I would give it indefinite intangible accounting, because that means you can only write it down, you can never write it up. And so you could have $15 billion or $150 billion of something, and it could be held on your balance sheet at $100. And not only can you not ever acknowledge it, all of your losses under indefinite intangible, they actually infect the P&L. So if a normal company bought $1 billion of Bitcoin and it traded down 30% and then traded up 150%, they would be showing a $300 million operating loss.
ETH has made significant strides since it was introduced by programmer Vitalik Buterin in 2013. While it still has a long way to go to catch up to the price heights of Satoshi Nakamoto's Bitcoin, the approval of spot ETH ETFs is seen by some industry experts as a game changer in the crypto space. This development could significantly boost the mainstream adoption of digital assets. How do you think the approval of spot ETH ETFs will impact the wider adoption of digital assets? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.